Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the Forex chart of gold USD in front of us. And yes, finally, I'm back from my vacation. Yesterday, when I opened the laptop and saw the economy calendar, I was shocked to see so many news lined up. And yes, because of the news, because of FOMC, we got to see some crazy moves yesterday. Gold made a high of 206765, and this was completely unexpected. At least it was unexpected for me. And right now you can see that gold hovers near record high levels at Fed hints rate hike pause. Gold prices traded near record high levels on Thursday as US yields and dollar dipped after the US Federal Reserve hinted it may pause the rate hike cycle, because of which there was a drop on DXY and we saw a sharp move on the chart of gold. The Fed raised its benchmark overnight interest rate by 25 basis points, but no longer said that it anticipates further rates increases would be needed, and only that it will watch incoming data to determine if more hikes may be appropriate. And right now the whole market sentiment is against DXY and US yields and your bonds. You can see that this is the US government bond chart, and bond is falling. And if you have been watching my videos, if you have been a subscriber, then you know it that we have a strong support around this level, and market US government bond is approaching the level again. So now the important will be whether market takes support around this level or not. If market takes support, well and good. If market breaks this level and starts falling, then obviously there will be a new high on the chart of gold. My dear friend, the overall market sentiment is very bullish in case of gold, and in case of dollar and US government bonds, the sentiment is not positive. And this is the chart of DXY, and DXY is also heading towards the critical support or last line of defense, that is 100.80. This is the last support on the chart of DXY. If DXY breaks this support level, then things will be very difficult, very critical for DXY, and it will be heading towards double digit. That means 99 point something levels. So this is the last level for DXY. Let's wait and watch what DXY does. Technically, this is the last support, but fundamentally there is a high chance that DXY will break the support. US government bond will break the support, because the market sentiment is supreme after all, and we cannot deny that. And this is the chart of gold in front of us, and as I said, and as we already know, that gold made a high of 206566 yesterday, and after that there was a sharp price rejection, and right now gold is standing at 2042. So if you already have taken a sell position, you can be on the trade. And if you're a swing trader or if you're a positional trader, then my dear friend, it is better to be on the buy side only, because the market sentiment is bullish. As a result, if you're planning to hold your positions for a couple of days to couple of weeks, it is better to follow the market sentiment. It is better to follow the trend of the market, which is bullish. And if you're a day trader, then yes, you have got the leverage to take trade on both the sides of the market, but yes, you also need to be very careful. So let's discuss one by one. So first of all, the trend of the market is bullish, that we cannot deny. But when market reach this particular level of the market, do we see an uptrend market? No. If we observe closely, then we can see the market is sideways here. And as I have already discussed in my previous video around 1 week ago, that the strongest support on the chart of gold is around 1950 to 1955, and surprisingly the support is still the same. 1950 to 1955 is still the strongest support on the chart of gold right now. But sadly, the level is very far away from the current market price. But if we observe the present trend of the market, then still there is a high chance that in the coming days market will be coming down to test the support level, because the sentiment may be very positive, but overall we can see that market is not going for a record high right now. So day traders, be careful. 1950, 1955 maybe on the cards in the next couple of days. And in fact, if market takes support and bounces, swing traders can also look for a buy position on 1950 to 1955 level. And before 1955, we also have a new support zone, or when I was absent, okay, market formed a new support zone around 1978 to 1970. This was also a support zone for the market. When market was low volatile, we could see that market took support a lot of times around this area. So next time also we can expect that market will be getting the support from the buyers present around this area. So if market comes down and takes support and bounces, we can also get a buy position. But the problem is that both the levels are far away from the current market price, and sadly right now market is standing at 2042, and we do not have any solid structure, we do not have any solid support or presence of buyers around the 2043 or 2040 level, because market is extremely bullish and this is a new high made by the market. So as a result, we do not have any strong level as a support right now. So if market comes down also to the levels that I'll be discussing right now, be careful, because as I said, these levels are not very strong and still we do not have any confirmation also. If market today or tomorrow, if market takes support and bounces, then only we will get the confirmation that yes, the support is present. Okay, the first support that we have is around 2008. Around 2008 we have a support, because you can see the previously this level was the resistance, and here the same level acted as support. And when we are drawing the Fibonacci here, we can see that we also have Fibonacci 61.8% retracement level. So previous resistance is right now acting as support, and we have Fibonacci 61.8%. So if we combine all the factors, then yes, 2008 seems to be a logical support for us. During the day, if market shows a downside, we can expect the market to take support. Clear? The next support on the chart of gold is around 2020 to 2017. This is also a support on the chart of gold right now, and the reason is Fibonacci 50. Yes, we have Fibonacci 50 around this level, and you can see temporarily yesterday before the news, okay, this level was acting as a support. So we have Fibonacci 50% retracement level, then previous resistance to act as support. Before news 2020 acted as a temporary resistance for almost 24 hours. So as a result, previous resistance may act as support, and around 2070 we could also see price rejection. Okay, so if we combine all the factors, 2020 2017 is also looks like a support to us. And before that, we can see that we also have a risky support around 2030 as well. So during the day, if market comes to 2030 level, observe the market, because here we have Fibonacci 0.382 or 38.2% retracement level. In comparison to 0.50 or 0.618, 0.382 is not a very strong level. So as a result, it can be a little bit risky, but be careful. If you're a day trader with proper risk management, you can go for a buy position. If you see that price is showing rejection from below, at least you can expect a profit of 40 pips. Right now I'm in a 4 hours time frame. Better switch to the 1 hour time frame or 15 minutes time frame. On the lower time frame, if you see market is showing support around 2030 2029, you can look for a buy position as well. But again, I'm saying in comparison to this level 2030 seems to be a risky level. And again, I'm saying market is bullish right now because of the ongoing market sentiment, and this is a new high. Okay, recent new high. So as a result, we do not have any solid support backed by the history. So as a result, please be careful and follow proper risk management. And one more thing I would like to add here is that, as I have already discussed, and we already know that the market sentiment is bullish, so as a result, it's better to be on the buy side only. Okay. And as you can see, that we also have, okay, if you go to daily chart, we also have a trend line as a resistance. So around this level, around 2076 or 2080, there may be some kind of resistance from where we can see some sort of price rejection, some temporary reversal. Mind my word, I'm using the word temporary. Okay, there can be some temporary reversal around this area. If you have the risk appetite, if you know how to take the risk with risk management, you can go for a quick sell opportunity. But if you're a new trader, if you do not know how to manage the risk, if you are struggling with the market, then forget about it. Okay, try to look for buy positions only on the levels that I have mentioned. Okay, and if market breaks 2080 level, above this level we can also look for a buy position. And the reason is that above this level market will be going for a new high, and we can consider it as a trend continuation. Above 2080 it will be a trend continuation, and we can look for a buy. Okay, but as of now 2076 to 2080 may create some problems, so as a result be careful around this area and try to look for buy positions because of the ongoing market sentiment. If you're wondering about the divergences on the chart, then yes, we do have some divergences, but right now market is not following the divergence. Okay, so that's why I have skipped the divergence part. But as of now, stick to the levels. Let's wait and watch how the market performs. By today and tomorrow, maybe the market will settle and we will get to see a clear picture. Okay, my dear friends, hopefully you got my point. Please follow proper risk management. This is my analysis. I can be wrong as well. No trader is 100% accurate. So follow proper risk management. Bye bye. Take care.